Raheja is with us. We also have Kunal and Nuresh from the technical side also with us. Kunal, let's start with you. What do you make of this, decently smart recovery for the Indian markets as we go into the last hour of trading session versus how global markets are?
Good afternoon, Pankaj. So I think relatively, if you ask, then I think it's a very strong move for the index because after the handover of more than 1.5% on an average down for the US indices, we would take any kind of a green, with both hands in this kind of a market scenario. And I think the highlight for today is a lot of stocks which are and a lot of individual sectors which are getting a bit more vibrant. Like for example, some of the sectors which you flagged off, sugar names are doing pretty well. The PSU index as such is looking quite strong. The PSU banking index as well looking quite strong. So many of the stocks which have managed to make a comeback, Reliance Industries looking strong back again above the 2,400 level. So you have slew of large cap names, many individual sectors which are participating, and I think that's a strong bullish sign for the markets overall. So we would probably have, I'll just wait out for maybe one more day of confirmation that the Nifty holds on to the gains as well as the levels of 17,750, 700 tomorrow as well. Then I think I would change the stance from being on the sidelines so then start to looking to buy the dips on the indices.
Okay, Nuresh, what about you? In the morning you had a hold call for Nifty as well as Bank Nifty. Looking at the up move, does it give you a confirmation to turn that into a buy, especially the outperformance of Bank Nifty today?
So I would still be on the hold side on the Nifty because I still think the broader markets, the stock-specific opportunities are much higher than the index itself. And say once you've initiated a buy around 17,400, it's a time to trail your position. And at these prices, we are still in the range for the Nifty. So we are not breaking out of that 18,000, 18,200 mark. So in that period of time, it makes sense to go more stock specific rather than the index. For example, if you're looking at the index has done nothing, but you are seeing a Nifty CPSE index make a new 52-week high. You are seeing oil and gas stocks do well. Power stocks are picking up. Today there was a tick in sugars. So the focus should now be more stock specific rather than the index. And going forward, say, till the time we don't cross 18,000, one should be more stock specific and closer to 17,900 is my target where I would actually look to book profits.
Nitin, let's start with you. You think that the recent outperformance in the Indian markets for last 5 days is telling us that FIIs are back?
I think it's too early to call that, honestly. And, but I think, FPI flows have been very erratic when we've seen that for quite some time now. So I would say it's too early to call this. I mean, just yesterday we had the Fed chairman come and talk about, the fact that interest rates could be higher than what they earlier believed. So, given that, and, as we get closer to the event of that really happening, you could once again see risk off. So I would say that you're going to see pretty much mixed signals as far as FPI flows are concerned. I don't think you will be able to read too much into a trend, at least in the short term.
Chini, that's the stock which is currently catching one's eye. That's shot up almost about 7%. In fact, it's at the intraday peak. It didn't start off the day quite like that, but since then, of course, has gathered steam. 400 rupees per share now, in fact, in Balrampur Chini. Kunal, quite a big breakout in Balrampur Chini. You think once again the entire sugar pack is going to get renewed, or is it only a Balrampur case today?
Yeah, I think it looks quite strong the breakout today because when you look at the charts over the last 1 month, specifically the stock was showing signs of consolidation. The volumes were nothing great. I mean, on an average. But then this move could probably now indicate that the buyers would come back again into the sugar pack as such. Now today's move is not for Balrampur, it's not an individual move or stock specific. Now you look at the rest of the pack, the smaller names as well as the mid cap names from the sugar pack. Praj Industries, etc. Most of the stocks have done exceptionally well for themselves. So I think on an average, if I'm not wrong, it's some 6% odd gains for individual stocks in the sugar pack, and this indicates that this is not a individual stock specific kind of a breakout which has happened for Balrampur Chini. This could be probably an indication that the sector would probably make a comeback for itself. Now for Balrampur Chini, what matters is that whether the stock sees an immediate follow through. If that happens, then this could probably result the stock into the stock breaking out of a 6 to 8 month kind of a breakout, and that could just accelerate the momentum for Balrampur Chini. So I think I'll wait out for maybe one more day of confirmation tomorrow, Even if these stocks are up another couple of percentage points, that's not a concern, because that could probably signal that the worst could probably be over, and the time-wise consolidation, which is always a nagging factor to initiate any trending or momentum kind of a trade, I think that would also get over for Balrampur Chini, as well as most of the sugar base.
In the meantime, let me talk about some of the stocks which are reacting to news flow as well. Kirloskar Oil Engine is, of course, the stock we have been flagging out from the start of the trading session itself. 13% equity has changed hands. It does look like that Kulkarni family has likely exited Kirloskar Oil via some of the block deals, and it's been met by good demand coming in from DIIs, insurance companies, some mutual funds as well. So that stock is reacting positively. You also have Krishna Diagnostics, which was up around 9 to 10% earlier. The company has operationalized 100 pathology collection centers in Mumbai itself, and it will provide the services of lab investigations facilities for BMC dispensaries and hospitals. So big fillip coming in for Krishna Diagnostics, and that stock also reacting positively. HAL or Hindustan Aeronautics is something that we have been flagging out. Recently, we have seen quite a few order inflows for the counter. Yesterday as well, there was an announcement that they have signed a contract of 70 HTT-40 basic trainer aircraft for Indian Air Force, and the valuation can be around 6,800 crore rupees. This is something which has been talked about for a while, but stock is still reacting positively with an up move of 5%. And then comes the entire Adani group of companies. In fact, all Adani stocks are in the green today. The prepayment of some of the loans, the reduction of pledge share, getting out of ASM, and a lot of other factors are actually supporting the stock prices for Adani today. Nitin, out of some of these names, I wanted to pick up HAL and discuss that with you. Would you be a buyer still in some of these defense names? And if yes, is HAL going to be the top pick?
So, we refrain from really talking stock specifics, but, if you were to ask me broadly on a sector perspective, I think the entire defense pack, is sort of poised for, tremendous amounts of growth, because directionally and regulatory, as well as from a government perspective, there is, this entire push for indigenization in terms of defense. Now, this growth, normally when you have businesses of this type, which have order book orientation, and tends to be lumpy and erratic. So while so if you're investing into this sector, you need to be prepared to sort of see through the long haul. I think if you sort of go down a few years down the road, clearly, I think the size of this whole pie is going to be huge, and all companies who are participating in this will do well. But it could quarter-wise, it could be pretty lumpy.
Okay, that's the move, or rather take coming in on some of the defense names. HAL, of course, is the one which has been most buoyant of the lot, of late at least. HAL holding up 5% as we speak right now as well. But Naresh, on the charts, what's looking most buoyant to you? Are there any other names other than Hindustan Aeronautics as well?
So Hindustan Aeronautics clearly is the momentum stock. The stock is close to a new 52-week high, a new all-time high. So clearly the one. The dark horse which I continue to like and is a fresh buy right now is Bharat Electronics. Now this is a stock which has gone nowhere for the last almost 6 to 8 months. It gave a breakout about 85, 88 levels, went up to 110, 15, and now is consolidating around that 96 mark. The stock has a breakout point around 9800, and this could be the next one off the radar, wherein it could go towards 115 to 130. So BL is the first choice. Then second is the Bharat Dynamics, which has gone through a sideways consolidation. So it's gone through a good consolidation for almost 6 to 8 months or even 10 months. The stock has been around that 900 mark for majority of the days over the last 6 months. A fresh breakout comes in around 970 to 990 levels. If that happens, you can get a 15% bump up here also. So looking at Bharat Dynamics and Bharat Electronics in the defense pack has to be the trades which one should go for.
Okay, on that note, we'll slip into a very short break, but don't go anywhere. Lots lined up when we come back. Welcome back. Well, the market is holding on steady. 17,700 is where we have been, just beating the bush around, because 17,700 and plus minus 10-20 points, that's been the broad range for the better part of the last 1 to 2 hours. In the last few minutes, though, we have seen an up move on the likes of Keynes Technology as well as KRBL, so watch out for those counters. And on the losing side, Macrotech Developers is coming under pressure. A cut of around 6% has been fairly volatile, this one, and even Aptus Value Housing is seeing a cut of 6%. Fortis Healthcare down 4%, Phoenix Mills down 4%, Policy Bazaar too seeing a cut of around 4%. But separately, there are some of the price volume action buzzers as well that we wanted to flag out for you, especially starting with Balrampur Chini, the stock that we talked about. It's broken out of a double bottom chart pattern. It surpassed the 50-day moving average and has formed a higher low for the 6th consecutive session as well. IndusInd Bank, that one is on a tear today. The last time I checked, it was up around 5 to 6%. It's been forming higher highs for 5th consecutive session and has surpassed above the 50-day moving average. And Vijaya Diagnostic too has formed a bullish candle and surpassed the 200-day moving average. It's the biggest single-day gain that we have seen in the last 3 to 4 sessions itself. Wanted your take, Nitin, regarding IndusInd Bank. That stock hasn't done much, at least as compared to the other peers, but finally it seems to be making a move. Would you look at buying? I know you don't want to talk stock specific, but if you had to, decide your top picks within the entire banking space, what are the top bets that you'll have?
So, we have, for the last many years, we believe that there's been a consolidation phase that's been happening in the banking and financial sector. And we prefer to opt for the larger banks in the sector. And obviously within that, the private sector banks, the top 3 or 4 have been within our radar. And then we've had a couple of public sector banks out there. In the last 6 months, as we've seen a lot of credit growth being very strong, we've started sort of, coming down and started looking at the tier 2 banks as such. And, again, within that, some of the banks, just as when you named, would be among the top candidates out there.
Follow up, Naresh, your take as far as IndusInd Bank chart is concerned, and a few of these diagnostic names, whether Vijaya, Krishna, Thyrocare, they're all quite active. Do you see any sort of momentum there?
So I would be looking at IndusInd Bank first. So if you look at IndusInd Bank, it's been a stock which has gone through a major sideways consolidation. Say the stock was at 1100 odd levels back in February of 2021, 1100 in November 2021. Then it has been around 1100 for the last, say, maybe another 6 to 8 months. Multiple tops around 1250. So it's going through a sideways consolidation. The recent swing high is closer to that 1180, 1190 mark, 1170 to 1180 mark. Once if it can sustain above 1180, you would have a next target at 1250 to 1280. And then comes the bigger breakout. So looks interesting if one has a longer term view. As of now, we'll need a lot more confirmations. But one could buy at current levels with a stop loss at 1120. In terms of those diagnostic names, I would still call it a single day move. Because if you look at these names, they've gone through a lower top and a lower bottom formation for the last 2 years. So Krishna Diagnostic was at 1000 on the listing. The stock went to sub 400 levels. And today we are seeing a one-day move. So I would still wait. This could be the first indication of a base formation or a bottom to be made. But would wait for more consolidation, and this consolidation could take weeks before we can say a trend is setting up. So would not jump into these names.
Okay, a couple of other stocks which are in focus, of course, this afternoon. And we've talked about Krishna Diagnostics, we've talked about HAL, and then, of course, that prepayment of 7,300 crore rupees worth of loans is definitely auguring well for the Adani group of names, be it Adani Enterprises, Adani Port, Adani Transmission, or for that matter, Adani Power as well. Nitin, curious to know whether you've been a buyer of any of the Adani names or recommended so at the dips.
No. So we've not, traditionally, if I have to say, companies who have been resorting to high leverage, right? We believe we are in a cycle which, post last year has been a break from a 14-year period that we saw post 2008, right? So we're in a cycle where liquidity is going to get progressively tighter as we go ahead, as rates are going to be more real than they were traditionally. So in these kind of environments, generally speaking, asset-backed businesses tend to get derated in terms of, ones who have cash flows. And the second is, businesses which have high amount of leverage, generally tend to struggle in such environments. And from that perspective, we have sort of avoided exposure to high leverage businesses as of as of presently in our portfolio.
Kunal, just wanted to get your sense on Adani Enterprises and ports, not as a trading opportunity, but would you think that there is at least a firm bottom in place for these names?
Yeah, definitely. I think a firm bottom is definitely in place for these stocks because we've seen, the short covering coming out for these names in this last 5 6 days. I think 6 to 7 days up for Adani Enterprise specifically. There has been a sharp reduction of OI, for the stock, and that's really a precursor of signal that the near-term bottom is in place for the stock price. Even for Adani Ports, in fact, when we look at the January, charts for the Adani group of names, Adani Ports did not retest the previous lows like Adani Enterprise did, and many of the other Adani group of name stocks they did. So Adani Ports was inherently, as it is, a very strong stock, and it's just gotten a lot of confirmation, breaking past about 600 and 650 levels, and then that 650 acting as a support or a base for Adani Ports. So I think both these stocks have been particularly looking very strong. Ambuja Cement is the third name, which I would believe that looks to be more solid as well, even from current levels of 388, 390. I sense that the stock is going through its own patch of consolidation, but the moment the stock would probably comfortably break past about the 400 levels, I think a rally towards 440, 450 would be very, very quick enough for just
Right. Nitin, in terms of FMCG, would you be a buyer over there? I mean, companies are saying there is a little bit of slowdown. Margins, on the other hand, are going up. Stocks have not done anything for 3, 4 years. You think that that is a sector which is looking interesting now?
So I would think that what would probably happen is in the current year, we've actually seen a slowdown in this sector for quite some time. As we get into a period where, as markets are consolidating and as slowing growth happens, or if you get into a period where if the El Nino effect impacts the monsoon, you might actually see some of these defensives getting bought into. From a pure valuation perspective, there's been a considerable amount of sort of consolidation in a number of these companies. Last year, they were suffering from the impact of inflation, raw material inflation in their books. So you will see higher margins surely pan out as such. So I think while they are not high growth businesses, which is the type of businesses we normally invest in, but they could be good defensive plays to sort of ride out this current sort of consolidation phase that the markets are going through.
In terms of auto, anything interesting? Two-wheeler, four-wheeler, auto ancillary, something like Aisha, which is a niche play. How would you look at that side?
Is looking interesting. We like the entire passenger vehicle side. We like, the CV side is also doing exceedingly well. On the two-wheeler side, you have to pick and choose, depending on each company and where it stands as far as the new model cycle is concerned. Clearly, companies who have come up and innovated in the market in terms of their model range have actually done well, even in the market where the overall two-wheeler sales, while traditional companies who've been selling the lower end. So, it's very interesting out here. What you're seeing is the whole impact of this K-shaped recovery that we are seeing in the Indian economy. Premium motorcycles are doing well, and the low-end motorcycles are really have been impacted primarily by the impact of the impact of inflation on disposable income for the middle and lower middle income class families.
In the meantime, Kunal, wanted your take on a few price volume buzzers. Kansai Nerolac is moving on heavy volumes, 20 times the usual average, and TCNS brands too is showing quite a bit of move, 8% higher with 8x the volumes.
Nothing great on the charts, frankly, Anisha, because both these stocks have been trading below their 200 DMAs, their respective 50-day moving averages. For TCNS brand, for example, the stock is showing a volume-wise breakout, but then a similar kind of a breakout was actually seen on the charts on 17th of Feb candle when the stock moved up from, I think, 430 to almost 500 levels. So a sharp 15% plus up move the stock had shown. But then from those 530 levels, the stock went into a further corrective phase and came back towards 455 where it closed yesterday. So till the time the stock doesn't see any kind of a follow-through price action, we'll call it as a one-day move for TCNS brand. and so would be the case with Kansai Nerolac as well. The stock is going through a corrective phase. It's trading below the long-term averages, and typically we've seen that when the stock goes below a correction zone and below the long-term averages, the selling tends to increase or accelerate for these stock prices, and a near-term bottom may not generally be in place for these stocks. So I believe that selling for Kansai Nerolac could be seen. For TCNS brands, if the stock rallies up above 525 mark, which could be a breakout for a 2 month, 3 month consolidation, that could be a classical point to enter the stock. So maybe another 5%, 6% higher from current zone is where the stock would probably eventually lead into the breakout zone.
Right. Okay. Nitin, we'll let you go on that note. Thanks as always for taking the time out and joining in today. Let's see where the markets have settled in at. And we've covered a lot of lost ground. I mean, at one point in time, we were down about almost 100 points in the Nifty futures. From there, we're absolutely flat right now. Bajaj Finance is the only one big, large cap which is weighing heavy on the markets as we speak right now. But Kunal, let's get your closing trades as well.
So yeah, I think one of the stock which looks very attractive on the charts is GNFC. The stock has confirmed a breakout for the 555 and 560 mark today. That's the stock which I'm looking to buy, both in terms of the futures as well as on the options.
Okay. And Naresh, your closing ideas? Naresh, your mic's on mute.
That's a buy on IEX, which I've been covering from 135 to 140 levels. The stock has been making higher tops and higher bottoms, and is now on verge of a fresh breakout above the 149 mark. And a very strong base has been made here, so expecting it to eventually go towards 170, 75 levels. So could be a sharp move above 149, 150 in the near term.
Right. Okay, on that note, let's take a very quick break. Bajaj Finance still under pressure, but IndusInd Bank is the one holding out, and Adani group of names as well, seeing a fair amount of recovery. Quick break. When we come back, the last half an hour of trade this afternoon.